Welcome to another day in the Matrix. This is Red Pill Podcast 130. I hope you're all having an incredible weekend so far, and we have a lot to get into today, so we're just going to jump straight into things after a couple of quick updates. So if you're new here, welcome to the Wolf Pack. It's so great to have you here with us. If you've yet to get access to our Discord server, just go ahead and send me a direct message over on Patreon with your Discord username and last four numbers after the username, and I will reply back to you with a Patreon message to get you onboarded into our Discord server. Please don't leave any comments here in the Patreon posts or email me with your Discord details. Please follow those directions I just shared. And we're doing incredible with the altcoin voting system here week by week. I appreciate you guys making this nice and seamless for me. Today we will be going over a couple of fan favorites, but we'll be checking out Multiverse X, Radix, Theta Token, Theta Fuel, as well as Litecoin. And I will be checking in with the traditional markets, perhaps the DXY. And we just want to get a broad overview of what's going on since the last FOMC meeting that happened this past Wednesday and the market's response to that, which was pretty much in alignment with what we were anticipating. And I'll be going over all of that today. But before we get into today's podcast, make sure to get yourself calm, relaxed, and comfortable. Go ahead, grab yourself a cup of coffee or tea if it's the morning time, or a glass of wine or beer or any beverage of your choice. This is the Red Pill Podcast 130. Really excited to be jumping into this one today because there's some really interesting dates right around the corner. But quick update, just wanted to let everyone know that in the first week of October, I'll be releasing my next full-length decode presentation titled The Great American Eclipse Decoded. This will be in preparation for the upcoming solar eclipse on October 14th, so that's something that you can look forward to very soon. I'm excited to share all of that gnosis with our community here. It's going to be packed with gems as usual, and it will be available here for the Mastermind community membership. So let's get straight into today's decode, shall we? Tomorrow being Yom Kippur, the Day of Atonement, and we're going to kick it off straight with the code. We have Yom Kippur, spelled in English, having this 39 in Chaldean, and we are about to move into the 39th week of this year in the Gregorian system. So kind of interesting how the first day of the 39th week of the year adds up to 39 in Chaldean, in Gematria. Well, let's give a quick broad overview definition of what Yom Kippur is, because some of you might not have heard of this holy holiday. Anywho, Yom Kippur is the Day of Atonement. It's the holiest day, and I'm using air quotes right now. It is the holiest day in Judaism, and it occurs annually on the 10th of Tishri. Remember, when we shifted from Elul to Tishri is when we had Rosh Hashanah, those 3 days that were the end of what I was calling Jubilee, the Jubilee year. We're out of that now. And this corresponding to a secular date in September or early October. The reason why it's either month is because September and October are in the Gregorian system. And of course, we're talking about holidays in the Hebrew calendar, in their calendrical system. And this is important because I am a firm believer that these important dates in the Hebrew calendar are actually what runs financial markets. Anywho, getting back to this, primarily centered around atonement and repentance, the day's main observances consist of full fasting, accompanied by long prayer services in synagogue, as well as sin confessions. Alongside the related holiday of Rosh Hashanah, Yom Kippur is one of the two components of the high holy days in Judaism. It is also the last day of the 10 days of repentance. So you could go ahead, you can learn more about this if you'd like. This date is technically tomorrow, and I suppose that means it starts at sundown tonight, because that tends to be how they do everything in their holy days. They use the sun and moon, unlike in the Gregorian system, which is primarily focused on just the sun. Now, I just wanted to cap that code of Yom Kippur adding up to the 39 and how it perfectly lands on this 39th week of the year, which we're moving into tomorrow. Now, outside of that, the day after Yom Kippur is actually very interesting to me, and I think this is the place where our decode will take a new route. And we've already talked about this Yom Kippur date. I've shared it many, many times, how I told everyone how we have this effect in the week numbers moving from lead to gold, and how gold was associated with the number 38. And we could just show you that by the code really quickly. We have gold 38. And how we're technically moving out of that energy into Yom Kippur, and it's between the 39th week of the year to this time frame of the 41st week of the year where we have our next solar eclipse. That has been the main theme behind what could be a black swan event. So I want to clear that up because a lot of people over the last couple of days, they were getting confused about this September 23rd date as if it was something that I ever spoke about with any, connections back to where it's popular, which was, again, a theme of Hollywood movies and TV shows revealing September 23rd to be some apocalyptic date. I've never for once agreed with such a thing. I don't believe in that. I never was falling for this idea, even on past podcasts that I've done with other people talking about bigger events to occur, such as blackouts or the internet going down and restarting, or false Carrington event, or any of this other stuff like a flood that would take out a whole country. I never entertained any of that, but what I would usually respond with, my truth, was that if there's going to be something that happens at the end of September into early October, it will be tied to finances. That's really all I felt, and we're here. We're right there. And we're going to be breaking this down more, but just again to clear up any confusion, the Wolfpack here was not getting lost in the sauce of September 23rd, and that was the point of yesterday's live stream, to kick it off with just some words of wisdom about the way we are looking at time, our decoding system, and how the collective looks at these particular dates. What sets us apart is we're not giving our prana to this stuff. We're decoders, but we're not getting emotional about it. We're saving the emotions for our real life. Save the emotion for you, for your family, for the real people in your circle, your friends, family, partners, etc. Don't get too caught up in this stuff that's going on in the exoteric. It's all bread and circus. It's theatrics, okay? And everything that's popular is wrong. So when we start to hear a specific date being extremely popular, and I know I've responded to this many times in our Discord over the past 2 months of people asking me about the date of September 23rd, and I was giving the same response every time. So here we are, it's come and gone, it's another day in the Matrix. Now we're back on the train of reality. So just to recap, the idea of moving from lead to gold, we've moved through the 38th week technically today. And now we're going to have a balancing effect of energy. And I feel that that would be the most sensible from Yom Kippur all the way up to the next solar eclipse. And you could even tack in the next lunar eclipse into this. And I think a reason for that is because we are now in a solar cycle. I've talked about this a lot. It was tied to this time frame over here of April 20th. We had I'll show you, there was this total solar eclipse that moved us into the solar cycle. Now, I made a lot of videos about this, full-blown presentations talking about what could be going down here, but leading into this second eclipse, the second solar eclipse of the solar cycle, is typically when we have a balancing of energy, and then once Bitcoin moves out of that, we start moving up. So solar cycles are bullish. We could, of course, have corrections during solar cycles, but Bitcoin tends to hold its structure. So in plain English, if I was to look at the Bitcoin chart, structure would mean not going lower than our prior lows. And Bitcoin has done this over and over and over again in every transition from a lunar cycle to a solar cycle. So the last lunar eclipse that we had in a lunar cycle was right here, literally the day Bitcoin made its low, and also the FTX ritual. And since then, we've moved into a solar cycle on April 20th, technically, and we've been maintaining an uptrend since. It is no different than every other time that came before that, even in this iteration over here, where we had the last lunar eclipses of the lunar cycle. Then Bitcoin moved perfectly into the solar cycle, which was right here in the beginning of July. And even after making this deep correction in the C19 crash, we held structure. We never went lower, and the recovery was almost instant in the grand scheme of things. It was a black swan event. Not even the most important black swan event of our entire lives has gone deeper than the bear market lows. That's really important for us to take note of in regards to our overall investment thesis and how we're looking at Bitcoin moving forward. Now, of course, anything's possible in the matrix, and I know I'm taking a tangent here and going into some of this stuff, even though, this is the Red Pill podcast. It's important we get spicy and we speak the truth. So, of course, there's possibilities for lower, but I'm banking more on repeat of structure over and over again based on solar and lunar cycles, not based on 4-year cycles or the halving or any of that exoteric stuff. I'm looking at this a little deeper. And because Bitcoin is doing exactly what it usually does, without any deviation at all, it would not be smart to bank against the cyclicality of a pattern that continues to repeat with precision. Where there's an anomaly in this would be altcoins. But remember, we're in the Bitcoin show right now. Until we get through the next Bitcoin halving and Bitcoin goes into price discovery, or at least starts getting back to 50K, any downwards pressure on Bitcoin will be even more devastating to the altcoins, and that includes things like XRP. So that's why I've designed my investment thesis accordingly. I'm not a Bitcoin maxi. I'm not an XRP army member. I'm none of that. I'm just looking at the facts of what is presented to me in the charts from an esoteric perspective. This is what's allowing us to get through this without getting emotional, without getting caught up in the fear and greed, and to be able to take action when most people will not. That's what makes us the wolf pack. So let's get back to today's decode, but I think a lot of that information I just shared, if you were to take note on it, it would be extremely beneficial for you. Okay? So the reason why I'm fascinated with this date of September 26th is because it is the day that is leaving 96 days in the year, and it's the 269th day. Where I see this pattern before is connecting it back to March 10th of this year, and you're going to see as above, so below. March 10th was the day that Silicon Valley Bank failed. We're going to bring this up a couple more times today, and we've brought this up many times this year, but it's important because that was a black swan event. So we have this numerological connection to the number 96 and 69. We can see that this was the 69th day of the year with 296 days left. That was the day Silicon Valley Bank failed. Then we have this being the 269th day of the year, leaving 96 days, the day after Yom Kippur. And why this matters a lot is because September 26th is a 24 date numerology, and we're now officially in the Hebrew year of 5,784. That adds up to 24. And considering we're in tropical Libra, that is your 24. We're going to be bringing in a lot of code today from astrology, okay? No stones left unturned here. Now, in sidereal, we're actually still in Virgo, and we're going to bring in this part of the code as well. So, Virgo is ruled by Mercury, okay? So we're going to be getting into this code of Mercury, which we've brought up a lot this last year. Well, this last Hebrew year at least, because we were in the Jubilee year, and that had that 23 tied into it. It was also tied into Bitcoin, and you guys have probably seen this code a lot. But remember, in sidereal, we're still in Virgo, and Virgo is ruled by Mercury. Mercury is the god of commerce, merchandise, fiat money. The Federal Reserve System is mercurial. And this brings up another connection to the date September 29th, which is also connected to March 10th. And you're going to see this. Now, this is the date. I'm really excited to break all this down. I think you guys are going to get tons of value out of these number connections, and I'm going to jump around quite a bit, but I believe it's going to start to make sense as we start to move through some of these data points. But first and foremost, we were just talking about that number 23 tied to Mercury. We know it's tied to Bitcoin 23 in the same cipher. September 29th is 203 days apart from March 10th. So in numerology, you're going to remove the 0, you get back to 23. 23 is your 9th prime number. And if we go back to Libra, we're going to see that's 9 in Chaldean. This also ties back to Bitcoin. BTC equals 9. Libra is the scales, balance. All right, that's the symbolism. We're in a time right now in the age of Pisces, where we have criminal justice. The scales are imbalanced, and she's blindfolded. Lady Justice is blindfolded on purpose because we don't have a system that operates for the freedom or for sovereignty. It's based on admiralty law. Again, coming back to the waters and ocean and sea symbolism. This is why we see a lot of tridents and a lot of the symbology around currency, oceans, waves, etc. This is Neptunian, Poseidian, etc. This is all important, guys, because we're transitioning out of Pisces into a new age, Aquarius. And this is where Bitcoin and crypto and these sorts of things will replace the current system we're in today. I believe a lot of you are already aware of this. And this new system means that the old system needs to move out. And we have to pay attention to this. These old systems go away. So the new form of justice will not be in a court. It will be handled by artificial intelligence. It'll be done by the eye in the sky. That's where social credit comes in and all of that stuff. So we'll be talking about that another time because that's a whole different route to go. But getting back to this code of Libra with your 9. And we were just showing before, 23 is your 9th prime number. So that's where you go a little bit deeper with the mathematics. So no matter what system you are following, whether it's tropical or sidereal, we definitely have overlapping code here. And as we have 2 overlapping zodiacal systems on certain dates as well. It's not going to get too complicated here, but this is where things start to get mind-blowing. Okay? Libra has 93 in it, just like Saturn has 93 right there. And you can see that September 29th, this day we're talking about, leaves 93 days left in this year. This is really powerful stuff. Now, September 29th has a 27 standard date numerology, and this brings us full circle to the Mercury connections. Again, Mercury rules Virgo, and Mercury equals 103. That is your 27th prime number. It's really important you take note of this stuff, guys. Now, getting back to Libra, Libra is ruled by Venus, and we're going to type that into our code, and you're going to see how this all comes together. All right? September 29th lands on a Friday, Freya Day, the day of Venus. You can see that the double-digit date numerology adds up to 81, just like Venus and Gematria adds up to 81. It also has 25 in Chaldean. In the same cipher, crypto equals 25. Crypto equals 97. The first date that I was talking to you about before, September 25th, the day of Yom Kippur, is the 97 days left in this year, with a 23 date numerology, again tying you back to Bitcoin, the main crypto, the crypto that runs this cryptocurrency market. How incredibly synchronized this all is, and I'm not done blowing your minds. September 29th is also the full moon in this code. It will be a full moon in Aries. Aries is Mars, the secret lover of Venus. There you go, bringing in the mythology to all of this, and this is how we tie it together even more. So this next full moon will be the one before our upcoming solar eclipse on October 14th, so it's naturally the first full moon since the end of Jubilee. So getting back to that code really quickly, Jubilee, it adds up to 23, just like how September 29th, connected to the last Black Swan event we had of March 10th, is separated by 203 days. Using the rules of numerology, remove the 0, 23. And this full moon in September is called the Harvest Moon. So we're going to type that out, Harvest Moon, and that's giving us 150 and 51. You remove the 0, you have 15. You have 51 and 15. Where do we see that? That's in Mars, 5115. Mars is Aries, the god of war, what rules Virgo, and we're still in Virgo in sidereal until October 17th. So, a little side note, I take sidereal more seriously regarding my decodes, especially when I'm focusing on finances, and we need to know the mythology for any of this astrology stuff to even make sense. Remember, as above, so below, as within, so without. So, getting back to the harvest moon, of course, we know the harvest is tied to Saturn. Saturn is the god of harvest, also known as Father Time or the Grim Reaper, skull and bones. And this can be proven by the code. Saturn equals 93 and harvest equals 93 in the same cipher. And this harvest full moon happens on the exact day that leaves 93 days left in the year, September 29th. Mind-blowing. So that's the key date that I'm looking to right now for a potential unexpected ritual. I'm not entirely sure what it could be tied to per se, but with this 93 connection back to Saturn, this could again be a Saturnian energy. So I would think of things like death. I would think of things like, sudden ends, maybe something that has to deal with quick, volatile, unexpected, sort of last minute change and disruption. That could be what's going on here, especially because this is the day leading into a Saturn day. And we have it being on the 1-9 date numerology. That's your 1-9, C19. We had 9-11. We know the 1 is A and 9 is I, artificial intelligence. Think about some of this code, guys. But that's how I would interpret this, because it's on a Friday. It's still in a trading week, and that could definitely be affecting markets. Now, just to wrap up all of these ideas, we've spoken several times about this 39th week of the year that we're transitioning into tomorrow and moving into the next solar eclipse on October 14th for the timing of a potential Black Swan event. And last week, we had the Federal Reserve FOMC meeting on September 20th, and the markets responded exactly how we anticipated, with a noticeable pullback and one of the biggest corrections on a weekly candle that we've seen since the second week of March, during the collapse of Silicon Valley Bank. I want you to think about that, and what could be the start of a much deeper correction into early October. So far, everything we've prepared for is going according to plan. If you've been paying attention to the last 2 to 3 Red Pill podcasts, we've been talking about this time frame, and if we pivot over into the indices, we're going to see that showing up in the charts. So this is a perfect moment to jump into those charts and do a quick check-in on the major indices to get a broad overview of the general market before we dive into the crypto charts. So I want you guys to mark that date on your calendars. We have the 29th, powerful date, powerful connections. Let's jump into the Dow Jones. And we're going to see some issues here. So look at that. So here is our structural low that was coming in after a little bounce on August 24th. And so far in the month of September, we're doing exactly what we do every month of September. We're not only in the red for the month, but we've broken structure and we've made a new lower low after a lower high. So we have our high technically of the year. We have a low, we have a lower high, and then this lower high has now confirmed by this lower low. We are in a micro downtrend on the Dow. Keep that in mind. Now, we have some structural levels to consider, one of which, and by the way, you see how I'm not putting any indicators on the chart. I'm not looking at any fibs. I'm keeping this simple. Simplicity is the answer. So I could just tell right here off of all this action around 33.5, that's a key level. And as I zoom out more and more, you can see what's up. Look at where Dow is trading at now, and look at before we started to come down here. Look at all this action and bounces that we had around this exact level. We can see all these wicks coming down, bouncing, coming down, bouncing over and over at this exact level we're trading at today. Keep that in mind. Now, when we started to go lower than this level is where things started to get a little off the rails. That's where the slide happened. And I could clearly see here that this level to consider would probably be around 33.6. So I'm going to pull up some fibs and see what's up. Well, there you go. That is your, if you zoom in, you're going to see at 33.6 is your 618 fib. That is the bottom of your golden pocket. And that's clearly the level that if we start to trade below that, things can slide very quickly, very fast. Now, I have a couple trend lines here. I know I talked about this last week, but it's important we keep this in our minds, even if we're not invested in the stock market, because this is going to show us where the energy is going for the crypto market. Now, I want you to pay attention to this trend line. Again, I already went over the bottom of this golden pocket. We have this trend line. We have effectively broken through it. Look at how long it was holding for on daily closes, by the way. It held for almost 200 trading days. Then look at the day that we got below it. It had a gap. Big correction on that week. So what I was saying before about how this was the single biggest weekly correction that we've had since back in March. Pretty noticeable. And on the weekly, you can clearly see a break below the 702. What did I tell you last week? I said keep an eye on the 702 fib. If we start to close below that, that is where things can start to get dicey, which is a good thing. We want this market to correct. It's in la la land up here. Buying opportunities are welcome for the wolf pack. That's where you get discounts. We should be happy about all of this. I know you are, by the way. I'm just making that note. Because a lot of people out there, they don't want this market to go down for whatever reason. And then a lot of the people that are extreme about it, they want this market to just crash into Hades. And I don't understand that logic either. None of these people are looking at charts and actually looking at things based on structure. They just want these arbitrary things to occur. And that's not sophisticated. That's why these people rarely buy discounts and they always FOMO into pumps. I'm not here to tell you what to do or who to watch or this or that, but when you have that sort of energy being, forecasted at you, go the other way. You need to have some data, some evidence, and something that's reasonable here. Anyways, now that we've gotten that out of the way, getting back to the technicals, there's another trend line that's clear to us. It was this resistance line that we back tested, and that was the last back test before we made our yearly high. This tells me that if we are going to start closing below those levels of what was this tiny little backup phase, that would be in alignment with the first analysis I shared, which was slightly above the 618. Closures below the 618 are in perfect alignment right around the closures that would be coming in of this major trend line, which we can see has been a prior resistance for about 200 days. So look at that. We had 200 days of resistance flipped. Then we had 200 days of support, technically could flip. Now, what we usually see is after we break a resistance line, we come back into it for a quick rejection, which would confirm it as a new resistance. But that's not the way it has to go, especially for how long we've been maintaining this uptrend. And the reason why we were maintaining this uptrend was because of the Federal Reserve and what they were doing. And as of last week, it's seeming that the market has responded and it knows that it's going to be changing soon. This whole year since the end of the Shemitah has been insane regarding this relief rally. Insane. Anyone who was following along back here in March into April, when we started to see this breakout at summertime into this level of the 888 fib almost, that was really unprecedented. There's very few iterations of some sort of relief rally like this, some sort of buyback within prior all-time highs. There's very few examples of this. I've been studying these charts for many hours every single day for years now, doing what I do, and I couldn't point one single time out that looks anything close to this. So the amount of debt that is cycling right now is unprecedented, and these interest rates and everything else going on, the prices of just everything, inflation, it's at extremes. And when we reach extremes in the data, that's when the bubble is seemingly about to burst. Well, it's showing its teeth right now. And we have some key levels to consider. That would be slightly below the 618 or this trend line. And then the next place we're going is probably straight to the 382 and even deeper. Now, if we go off of this correction here, from this peak down to this level, that was about a 16% correction. If we were to consider a 16% correction off of where we're at now, that would pretty much bring us back within, not double bottom territory, but it would get us back within the lows, slightly below the 236. And that would be normal after an automatic rally. You either have double bottoms or you have a spring. Now, if this really wants to get ugly and it was to spring out, it would go to the 26,000 point range. That would be dramatic. Let's look at the C19 crash, which only took like a month to fall. That was a 37% correction in 34 days. Off of where we just reached, 37% correct. Yeah, geez. Ooh, okay. Yeah, that if that was to mimic in less than 40 days, it would be like getting there by September. Excuse me. Yeah, that would have been something to maybe consider off of a crash date. We can't determine that now. It's impossible. It's impossible to determine the speed. The speed doesn't really matter though. We know that it's percentage movements that would matter. Oh my God, getting back to 23,000 points. Whew, yeah, that'd be rough. But a typical spring after an automatic rally would be just something like this. So if I moved over the chart and I showed you with the drawing tool, you would, let's just say you have bull run, you have buying climax, you have selling climax, there's your blow off top, then you have your automatic rally, then you have a spring going deeper, then you'd have your SOS, backup phase, and new bull run. Okay, so if we look, this was your buying climax, this was your selling climax, this is your selling climax, up here is your automatic rally. Technically it was as early as this, and then now we're in this phase here. I know the strong looks like shite, but you guys get what I'm saying. Okay, so that would be more likely, using the Wyckoff method, what's to come next. At least a pullback to the 382, 236, and if it wants to get more dramatic than that, well, you guys know the numbers. Let me quickly check in on the S&P. Ooh, okay, so we got a big gap here. The last time we see that was right over here, into this August time, where we had a really dramatic correction into our lows of the year. There you go. And that was right around the same time frame of the year, October 13th. What's October 13th this year, guys? That is a Friday the 13th, the day before a solar eclipse. That's why I've been telling you this black swan moment, it's more likely into that time frame. It's around that solar eclipse. Everything is about eclipses, really, when you're considering moon cycles. Moon and solar cycles are powerful, but when you only know about full moons and new moons, you have a little bit of data that helps you, but it's knowing about these eclipses that's even more powerful. And then you throw in Mercury station retrograde into the mix, and then go even deeper into the mythology, then you start to really get a sense of what's happening here. Of course, I teach a lot of this in my Crypto Mastermind course, and anyone who's bought it over the past week, I'm really grateful for your support. It means the world to me. And I do have a lot more gnosis to share in the new upcoming Decoding Mastermind, which I hope to have finished before the end of the year. So stay tuned for that if you're interested in even more, information. But getting back to this S&P chart, I do see this white trend line to be powerful. That's your line in the sand. If we gravitate down to that, which I very much think we will, the next level we're going to is right there, slightly above the 236. That could be a very dramatic crash fast. I don't like using the word crash, though. It's not my favorite. It sounds very, it's hard. It's hard when you're a wolf. You always want to just be like chill about things. Well, we got something going on here, family. You saw that quick trend line that I just drew in. We got touch point, and what is like a parabolic run all the way into the 888. Then when we rejected down from it, boom, rejection. You see that coming up to that level? I was trying to explain that a little bit earlier. That's a sign of weakness. So this is more likely heading down. And I talked about the 702 level earlier. That's, again, we want to look for that. When we start to break below the 702, we're coming straight into this level at 13,700 and then even deeper. That was kind of the thesis on putting in some shorts on the NASDAQ for sure. There's a lot more volatility there. Again, that's not a trade setup or trade advice, but we could definitely be seeing a 20% correction. in this market. And the levels to look at would be right here if we want to go super, super deep, at least touching down at 11,000 points. That would be dramatic. That'd be very, very dramatic. Here we got a 23% correction off the top right here. We're looking at 23% correction. Yeah, it'd be somewhere between the 382 and 236. That's the first thing I teach everyone because that's structural. Now, if you break structure, you're going double bottom. And if you go lower, then you have spring. And the spring action is typically black swan stuff. It's like really dramatic reactions and panic selling. It's panic selling. But I like these two red line levels here. If we're going to get something deeper, it'd be amazing to see the market come down that quickly, that fast, that much. So there you guys have it. We're going to just step into the DXY, see what's up with that. Oh, yeah. So the DXY did what we thought. We had this green line here, and I talked about this level of the 382, and look at that. We got above it. We started to break out slightly. I don't think we've made a new high yet, but that level is crucial. So getting to the 0.5 fib by early October on the DXY is normal. That's what I would expect. By the solar eclipse, we should be at 107 on the DXY. Keep that in mind. That's negative for the market. And you know what's messed up, guys? We can literally buy back everything that was lost in the same month of October. So whatever correction we get, like, it's really a take action moment. That's really the main part of my thesis. That's what I want you guys to all walk away from with all of this. It's that we are the few that are actually planning to take action on these moves. We're not just sitting around talking about it. We've been doing some real hard work in preparation. And again, leverage on the community to ask questions. I'm not the best resource with DMs because I'm already doing so much work here to go and make video content showing you exactly play by play what I'm thinking and sharing my gnosis. You need to reach out to the community in our Discord for some of the more specific questions, and that'll be way more helpful. Because if you're from Portugal or Australia and you have a specific question that could be relevant to exchanges in your country, I'm not going to know. You need to reach out to the community. That's what's the beautiful thing about what we have here. We have everyone all over the world helping each other out. So we're getting into Bitcoin here. Remember I talked about this chart last week and how we had what was a pattern every time we would test this major white trend line, we would have a bounce. But then we were holding these structural, like, kind of downtrends before popping up. And on this downtrend, we had it finally cave in right here on August 16th. Got lower, came up for rejection. This was during Mercury station retrograde. I told everyone how this iteration right here reminds me a lot of this moment right here, same time frame. And I'm going to let me take a note of that. I really want to go over that. That's so important that I get into this chart, this Mercury retrograde chart. Okay. My point, though, was I talked about this in the last Red Pill podcast, I'm pretty sure. How if we come up to this trend line again and get rejected, that's a sign that this is a very strong trend line. And where did that trend line align with? The 382 fib. So again, we have a high, lower high. We have our lower low technically coming back off of this big move that we had on August 17th, and then another lower high to follow it. So if Bitcoin starts to get back to 25 and show weakness, this could be rough, but this is a good moment to go over to this chart and show you. We had a setup back here in September 2022. These red boxes are Mercury station retrograde. You see, we had a Mercury retrograde right before eclipses. So here, that's the setup. We're in the same month of September, same time frame, Mercury station retrograde right before eclipses. Now look at the structure. We move into Mercury retrograde, pump, fake out, get right back, and we end neutral. Here, we have pump, fake out, come right back down, end neutral. Look at where we ended the month. It was the same as where we started, technically, day to day. Then look at how in this iteration right here, we moved up into the eclipses slightly. Low volatility, just jagged, moved up into the solar eclipse. Here, we're doing the same thing. We're moving up into our eclipse. Now, that fascinates me. The only difference I could share with you is back here we were in a lunar phase. Right now we're in a solar phase. So maybe we move up a little bit, actually, out of these eclipses. And then that would be in alignment with what I've been talking about a little bit earlier in the podcast, where we were saying that when we have our lows that come in before the start of the solar cycle, that's as low as we get, even with the black swan events. And that the last major one we had was C19, where it affected everything. It affected markets. It affected our lives. I don't think we're going to have some shit like that happen for a while. But we could have it isolated to a specific asset or a specific company or a specific country, okay? And that was the idea here of what could bring down this. But I have a counter theory, something that I've been talking about here and there, and that's this Bitcoin ETF jazz. So if we get a move down, the idea behind it getting quickly bought up again would probably be in alignment with a Bitcoin ETF, and that would be the exact reason why we want to position ourselves before that occurs. Go back into the 2003 gold chart, and you can see 2003 gold chart, beautiful move up after the gold ETF passed. Now, I don't want to jump around to too many different areas here, but we are heading into this eclipse season, and we saw what happened last eclipse season, but this was, again, a lunar cycle. This is a solar cycle. I don't know if Bitcoin's going to have this devastating huge move. Can the stock market? Yes. Why? Stock market is super high up right now, super overvalued. Crypto has actually lost a lot of its market cap, and it hasn't recovered nearly as much as some things like tech stocks. That's because Bitcoin and crypto are still very speculative. Where things like Apple, it's not speculative anymore. Everyone's walking around with an iPhone, So you have to think about it from that perspective sometimes too. I'm betting on this is the time frame for the best buying opportunities, probably until 2025. I don't say that lightly. So this is it. We're right there. This is really great. And it's not to tell you to buy Bitcoin. You have your own investment thesis. Do what you want. But this structure, the way that we mimicked it, it's seeming that if we're going to get a quick impulse to the downside, it would be more likely happening in this arrangement. Okay, let's get into some regular analysis. Maybe check in on a bi-weekly, see if we have a close coming in on that. We sure do. So tonight would be a bi-weekly close, and so far we're looking pretty damn good. I mean, nothing to really complain about here with this green candle. It is technically lower and a micro downtrend. We're below the 8. That's not great. Let's see the... Oh, okay. So we're getting a ton of resistance on these EMAs. That's sensible. We're getting a ton of resistance on all three of these EMAs in the EMA band. The EMA band is squeezing together, so that's not good. And again, if we're going to have a huge move to the downside, I would look to this 200 exponential, which is sitting around 20K. And that's about where we flashed down in the week of March 10th for Bitcoin. I'm going to show you on the daily. It was right here. Let me go to the weekly candles and see if we're seeing anything. Yeah, and we talked about this before too, that we could literally have a flash below the weekly 55 and get right back above it in a couple weeks, just like we saw back here. You see March? Let me turn off some of this other stuff so you can see. I want you to just pay attention to the white moving average, all right? You see how we were holding it. This was the start of your last solar cycle. We gravitated down to the 55 simple. This is what we're doing now. Then we popped up a little bit, but we had this black swan event, but we got right back above that 55. And then once we got below it and recovered, we maintained an uptrend till the end. Now, the last cycle was so much cleaner. I really hope that we're repeating this cycle, not this shit. This thing was annoying. It was hard for me to learn too, like studying this cycle. Now I'm much more savvy because I put a lot more of my prana towards studying these last two. But it's specifically this one that was interesting to me because back here we were in a Shemitah year. Here we weren't, but here we were. So this seems to be more likely. But because we're interacting, getting very close with this 55, we're going to leave a different blueprint most likely. Holding it, though, the whole way seems to be the case. Let's go to the 5-day, see if we're getting any data. Oh no. So we're about to have a wolf cross on the 5-day chart between the 8 and the 55 symbol. Again, that's signaling down. That's an important cross. You see, the last time we got that cross, we were pretty much making our yearly highs. You see here, we got this cross. Here we got this cross up, made our all-time high. Then right when we made our cross to the downside, you see the 55 started becoming a resistance level. That's super important to realize. So look, this is the last Bitcoin all-time high. We have a wolf cross to the downside. Then after that happens and we break below the 55, we start to treat the 55 as a resistance. Both times before this dramatic sell-off that continued all the way until this moment here. And now we're riding that. So will it flip as a support? It's really hard to tell, man. This is like one of the most tedious things to determine. It's really, really rough. But anyways, we have if we just take everything I said and put it on the sidelines right now and look at things for the way they are, Bitcoin didn't really make a new low in the structure. Like these tests back on September 11th and 12th are perfectly in alignment, almost identical to what happened in June. Look at that. The same structural candle before doing the same pop. Now, obviously, this was just a much quicker recovery. Then we had that firmament dome chart. Let me quickly check in on that, see if I can pull that up really quickly. If I can, I can't. Oh, there it is. Oh my God, this is so accurate. Scary. Woof. Oh my goodness. Look at this shit. Let me turn this off because this is just... Ooh, no, I should leave it on because it has that 236 test. Okay, just look at the dome. Look at this shit. We perfectly came. It's crazy. This is the craziest fucking analysis of all time. I mean, if this keeps respecting this is madness. It tells me that look at that. Look at that. If we were to hold our lows, it would be out of the dome by the solar eclipse. You literally can't make this shit up. So I'm banking the best opportunity will be before November. Like it seems that the best opportunity will be before November. That's where you want to get situated. So this is like the final moments for real. Like I'm not trolling here. All data aligns with that. Now where we're at now, pulling this fib from that swing high to the swing low, we did get above the 236, rejection of the 382. This is a good hold. And if we were to look at this based on a short-term Wyckoff, a micro Wyckoff, you have buying climax, selling climax, automatic rally, then here would be your spring test followed by a slight recovery. And if you were to get above that 27,000, not only are you breaking the dome, you're breaking the 382, and then as well, you're breaking the structure, which would be like of the vibe of recovery. That shit would be so wild if that happened now. Or we just get rejected on the outside of it. Look at how we got rejected on the outside of it over here. We just rode it for days. The same getting into it. So it's a fascinating analysis. It's not anything that you would normally see. Yeah, but that's why you guys like what we're doing here. Okay, let's get over to ETH. It's probably going to be a quick take on ETH because it's the same story. It's in horizontal. Let's go to the biweekly. Maybe we have something to say. Oof. Okay, so we had lower biweekly than back in June. Then we had another low, then another low. We're on 3 straight biweekly red candles with new lows. Weakness. This is not good. So the next level we would see as a structural test would be about 1,500 on the nose for the candle closes on the biweekly. And we're about to close a biweekly tonight. So closing on this red is not looking great. And then I would assume that 13 is in the cards. So about 1,300 ETH would be the next big pullback area. On March 10th, it was at 1,378. This has been a very strong quote unquote bear market for ETH. And I guess the reason why it's been so strong comparatively to the last, look at that. That was like a 95% correction. Here we had a lesser correction and the buyback has been holding a trend. You know, like look at where ETH was at the end of the year. It was at a higher low, whilst a lot of coins were making lower lows. Some coins are still at lower lows today, while ETH is maintaining its trend. So ETH looks solid comparatively to the rest of the alts. And again, another cycle that proves something that I said in the beginning of my mastermind course that was released a couple years ago. It is the safest altcoin to be in during a bear market. And this time it proved itself, and it outperformed itself from the last iteration. So that ended up being a strong piece of non-financial advice, but I practiced it. It was something I was talking about, how I like to have about 50% Bitcoin to 60% Bitcoin, and then 25% in ETH, 20% ETH, the rest in XRP, and then I'll kind of play the alts accordingly. This cycle around, I ended up accumulating way more XRP actually, but that ended up being really beneficial because I sold a lot of it at the 80 to 90 cent target. So I had a clean play, and I took action, and that's how that all ended up. But I bet if I was to go back to my portfolio and reassess, it would be more balanced between ETH and XRP, and that's what I want. That's what I want anyways. So it's a less painful bear market, what I just exposed. That's all it is. It's a less painful bear market. It would be like being in gold during a bear market. It's just less of watching your whole portfolio drain 90% to 99%, which is what's the case for a lot of people who only are situated in altcoins. Now, that time frame is like 90% of a cycle. The 10% is your bull run. So it's much more time being in pain. And that's a big part of my thesis. I hope that makes sense to people. And it's not about being emotional or about thinking that you did the wrong thing or that you made a mistake. That's not the case. There's no shame or guilt here. We're all learning. I just talked about this basically at the beginning of my, time here doing this WatersAbove project, and got a lot of shit for it. A lot of people didn't like how I was sharing these ideas. And I'm like, well, we watched a cycle go through and play out, and now we can't really say that those ideas were bad. They were definitely not bad practice. It was the safest, and it ended up being the best in the grand scheme of things. Much better than holding Dogecoin or you name it, right? Litecoin, any of that stuff. So what we have here is a sign that if we're going to drop a little lower, the 1300 to 1100 would be a good area of accumulation, and that would probably be in alignment with Bitcoin making a move down to the low 20s. Let's go over to XRP. Good thing to see. XRP is liking this 50 cent range. Every time it drops below it, it's a pretty quick bounce. I've talked about how there's a potential 41, 42 cent XRP possibility. That's in alignment really with this key trend line at the bottom right here. I know this is a very messy chart, but bear with me. We have this key blue trend line, so nothing has changed from last week's analysis. I'm going to keep it at that, especially because this yellow trend line is proven over and over and over again to be a key resistance level. Look at it going back here all the way up to today. It's officially 1 year ago. And look at how XRP reacted 1 year ago. We had this crown top distribution vibe, and we had a big major correction on the lunar eclipse. So lunar eclipses affect XRP too. I just want you to know, it's not it's not saved by any of this stuff that's going on with solar and lunar cycles. It still has to bear the brunt of it. That's just how it goes. I'm just going to drink some water real quick. 1 second. Okay. So to me, this could be the part of a potential head and really, really awkward head and shoulders play, but I'm going to draw it out for you. So you have left shoulder, head, and your right shoulder complete, back testing this same line here, which would be perfectly in alignment with this blue trend line I've been talking about, which is also in alignment with this horizontal trend line, which we were holding as a resistance until we popped into this automatic rally phase. It would be very likely we return back to that level. And this trend line down here has been in play since the C19 crash, technically. We're talking over 1,300 days, okay? That looks awkward, sorry. Hey, it's not my fault XRP made that shape, but this rocket ship is not doing too well. Anywho, going back to 41 cent level would be a gift. I would love to accumulate at 41, 42, even 43 cents. We're basically there. It would just be a 15%, 16% drop. That's nothing. But it is a good accumulation level. Most people wouldn't expect it, but having your buy levels there would be nice. And if you don't want to be greedy, just put it slightly around the 236. I mean, really, what difference does it make? Now that we're here, before we move on to the other altcoins today, I just want to tell you guys about the last post that I made over on Discord and in the Patreon. I was very vulnerable and transparent with everyone that I plan to sell very soon purposefully at a loss on certain positions that I have for tax loss harvesting. This is legal. I'm not telling you what to do. I don't know what your tax regulations are. I'm not your CPA or your financial advisor or any of that. So this is not advice to you. If you live in another country like Italy or something like that, like you're going to have to do your own research. But for me, as a United States citizen, this is something I could take advantage of to help in regards to my overall tax liability. So I will be selling purposefully at a loss on some positions, and pretty much I've calculated it in a way that if I do my selling on other altcoins that have been at a loss this year, it will make up or balance out the capital gains that I would be paying on my XRP play that I did, where I was buying XRP at like 30 cents or whatever, and then I sold it off at the 80 to 90 cent range. So there's a method to my madness. It's what I'm doing. I have a strategy. I have a plan. That's why it's not like I'm just pulling these numbers out of thin air. I did the work. There's a rhyme and reason to it. Now I urge that whenever you make moves in the market, that you do the same. Don't just like buy and sell because of what some YouTuber's saying or some shit that you see on Twitter. Actually have a reason to do it. So I am purposefully taking a loss on some positions for that reason. It'll probably be stuff like VeChain and Theta. I have zero, worries about this stuff. I am solely doing it for the overall vision. And then what I will do with that is I will buy back certain positions and I will probably cut away and have a more simplified portfolio. And I'll be getting into that more as time goes on. I will set any updates up on our Discord when I decide to buy or sell. So don't worry, you will be updated here. And so that's my plan. Excuse me. I'm okay with taking the losses right now because I could just buy back in for the next cycle. I just want to be very strategic and methodical about it. I'm getting to a place now where I think having too many different holdings is actually problematic, especially before we get regulated. Look at this chart we're looking at right now. It's kind of says the story. This did well because it was in the right place at the right time, but now this is perpetually selling off. You see how different this looks comparatively to, let's look at Ethereum, for instance. The example I was just using before. I'm going to take everything out of this chart, make it super clean for you. We're just going to look at the last bull run to right now. Going to zoom in, same time frame. We're going to turn all this noise off, and let's look at the difference. Let's look at the sell-off. It's still going. This thing has lost 96% of its value, and it's still continuing. Whilst ETH lost 80%, 81% of its value, and that was finished over a year and a half ago. So this shit is just retail nonsense that keeps going down and down and down. There's no big players in these coins. Now, okay, I should slow myself up because some people might be getting too hot in the sauna right now. Okay, this is Elrond. It's been, I guess, rebranded to Multiverse X. EGLD is the ticker. But we got to be real here. Look at these charts. Like, I mean, again, the right place at the right time. So the only thing positive to say about this thing is it is up a lot from the C19 moment. It's up a ton, okay? So this would have been a great investment back here for this short time when it was being launched. But after that, most people probably weren't in it at that time, most likely not. So unless you were buying back here, that was really the only good time. It doesn't have longevity. It doesn't have a bunch of other cycles that came before it. And this chart right here shows that if you've been holding it since the last bull run, it's just been down, 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 down without really any automatic rally in the process. So that's a sign of weakness. And to me, that's a sign of retail only. And that's not something I want to bet on. So I'm just sharing, some nuggets of wisdom in my overall investment thesis, why I decide to pick certain things and why I stay away from certain things. And this chart's not very compelling to me because of its performance over the last year, where since June of 2022, we've been on 400 additional days, 500 additional days of down. Okay, so now that we got that out of the way, let's look at this level right here. That's the next level we're going to. $7. I mean, fuck, it's at 20 now. It needs to chill out, or else it's gonna still keep rolling downhill. I mean, at best we have, at best, if we break through this trend line, it's game over. So look at what's going on here. We have this peak. We broke through this peak. Then with the end of this bull run, we came back down to it. Then we double bottomed. Then we sprung. Then below the spring, we've gotten rejected since. So if this rejection is true, we'll make another lower low on the weekly. And if it breaks below this key support line that's been in play for 500 days, this thing is going to flow downstream. Okay? So these are venture capital plays. You put a little, it goes a long way. It was great to be in back here. I don't know if this thing has the juice in it to make it to another bull run. Now, my theory here, by the way, amazing run up last cycle, but we're not there anymore. The past is the past. So moving forward, this thing could have an opportunity to do what XRP did, or what Monero did, or Litecoin, where it comes up into its 888 fib or the top of the 786 in the next run. And if that is true, if it bases out somewhere soon, well, then that's an incredible opportunity to get a 700% gain on this project. So that's me saying that, be strategic with this stuff. I'm not telling you it's the end of the world, but these projects are more likely going to go away once regulation kicks in. More than likely going away. So that's my take on this. I'm not trying to be doom and gloom. I'm just being real. Look out for some of these triggers that could send us down to this next level, which is as low as $7, because there's thin air below this support right here. Seriously, thin air to 750. Be careful. Okay, now we have Radix. Oof. Okay. Radix, ticker symbol XRD. So this is the bull run back in 2021. This is when Bitcoin hit 69,000. So the first red flag here is there's no data before the C19 crash or during that. So we don't know how this thing can handle a black swan or getting knocked out. Well, what we can see is that it lost 95% of its value. That's very normal. Into the exact time frame that most altcoins bottomed out. So that, again, that's very normal. Actually, since then, it's made an automatic rally and it's come back down and held structure, as opposed to the last chart we were looking at, the Multiverse X chart, was at lows lately. This one's at least structurally a little, has a little bit more structure to it. They're going to pull a fib. This is a massive fib. But there you go. It already had the automatic rally. You could see the swipe above the 382 straight to the 0.5 fib. That's a textbook automatic rally, but it's not a good looking one. It's a shitty looking one. Now that we've come below the 236, this is a horizontal level that we've seen this project get choppy at. And it's all going back to this moment right here. It's a horizontal trading range between here. So you see, we had all this sideways before dumping, and then we came right back up to it, rejection. Then after we broke through it, we came right back down to it, and now we're playing around in the same area as we did back here. So this is a key level, somewhere between 5 cents to 7 cents. And breaking below that is probably going to send you to this next level around 4. I would say around 3 to 4 cents would be where this thing is going next, regardless, because we already completed the automatic rally, and it's normal for these things to have a double bottom or a spring. Now, some important information is if this thing has a spring, then it's just continuation into price discovery to the downside. Price discovery to the downside is not good. It's very bad. This thing has been in price discovery to the downside since it was created. I'll say that again. This thing has been in price discovery to the downside since it was created. Bitcoin, on the other hand, has been in price discovery to the upside since it was created for over a decade. This thing has only been around for a year, and it can't even hold structure. It's just perpetually down, down, down. That's not good. And the automatic rally it had was too fast, too quick. Most people probably didn't even take action. This is clearly only retail, and I'd be very weary of stuff like this. So be wary of stuff like this, family. Like I said before, if this decides to hold structure, maybe we see it come up into the golden pocket in the next cycle, but probably not going to go on to these new cycle highs like a lot of people would be anticipating based off of prior bull cycles, because we're not in the same economic environment anymore as we were back in 2017. 2017 and 2024 are nothing alike. We have a totally different show being played to us. So moving on from this, very speculative, probably more dangerous than safe. Now we're looking at theta. This is a position of mine. We're looking at about probably like 4 or 5% of my overall portfolio. So nothing that makes me feel nervous at all. This more like Elrond, but the difference is we have a lot more data in the past. Similar to Elrond, we have this pretty decent difference between the C19 crash and where we're trading at today. Also very similar in this huge sell-off. So this project has been extremely disappointing in the bear market, very much so. And now that we've returned back to this little range over here, it needs to hold. It really does. And it chopped around here for quite a bit. I know it looks like a little, but technically about 90 days. Now we're probably surpassing that. Yeah, we're getting into 100 days. We need to see how this interacts, and we have a lot of trend lines to go over. I know it's very messy. Let me probably move this to give some gap. Let me move this. Let me stretch this. Again, I'm just trying to make this a little cleaner for you guys. We have this level at the 236. And right here, we have this red trend line that was getting multiple rejections lately, which sent us into another leg lower. Again, weak, not good. But we have right here, I want you guys to, maybe I should change this color, be a little better. Turn this, let's go white. Make it 0.4 pixels. Okay, so you see all-time high, bull trap rejections, lower high, to your deeper correction. Then we came up to it, traded around it for a little bit. Let me turn this to another color. Let's go blue. Look at the white trend line, how it's been behaving. We flipped it. We actually got slightly below it for a moment. Again, that was during trying to remember that time frame. Anyways, it doesn't matter. What matters most is we've seemingly flipped this on the outside, but we're still making lower lows, so that's not great. In my opinion, we need to get back above the 236 for this to have any strength. So for those that have theta in their investment thesis, this is extremely oversold right now. Extremely oversold. And if it's going to go lower, then that's really like lights out vibes. Like we're talking 29, 30 cents. With what Bitcoin's been doing lately to altcoins, that's not completely out of the cards. So this is one of those projects that I really need to be cautious with in my investment thesis. I need to reevaluate. I need to do some research and study deeper into what's going on here. I do believe the future of just interacting with the world will be streaming. Things like Twitch, and you know what Theta is essentially the blockchain version of a live streaming platform, Twitch, a gaming platform too. With their governance token T-Fuel, which we're going to look at in 1 second. But yeah, this is clearly a very speculative play. It's always been. It didn't have that 2017 bull run to go through, so we're working with very limited data, but it did have a nice reaction to the black swan over here, because you look, it held structural lows. Very, very, very similar to the way Bitcoin was. And then it went parabolic. Like, look at this bull run. Craziness. So I need to reevaluate this in the long term, and it's probably more likely going to be redoing like a move up to the golden pocket rather than price discovery, more than likely, unless something changes about what's going on here. But We need to see, of course. That's why, again, having these venture capital plays 5%, 4% of your overall portfolio doesn't really hurt you too much. You can sleep easy at night. When you start getting into the 20% plus of stuff like anything, pretty much anything outside of Bitcoin and Ethereum, well, could get a little nerve-wracking. And then you need to be a little bit more strategic, or you need to be a trader. And I don't recommend people become traders, by the way. I tell everyone, if you're ready, if you're moving on to this lifestyle of becoming a trader, you want to go through the Crypto Mastermind course first, become really well versed in charts, then you step into the advanced trading course, and by the time you're done with that, then you could conservatively trade. And if you keep a trading journal and you stay conservative and you do paper trading and you follow everything that I share in that course and really stick to it, don't get, emotional. You can absolutely become a trader and be one of the few that actually profits from this market. So if that's something that's interesting to people, even though I don't recommend people become traders, if it's something that's interesting to you to recoup losses or to just, if you have some free time, you're retired, whatever's going on in life, that's something you can consider. But it's not something I recommend to people. It's much better to just hold, develop strategy, create business, hold, buy and sell accordingly. So getting back to this, we need to see theta get above that 236 fib. Otherwise, it is still in its process of selling off and figuring out where it wants to slow down. Now, the only thing I could really say by the code is I know we have 45s and 54s in theta's code, not much 30s. So if it's going to come down to those levels, that would probably be what I would consider. 45 maybe the deepest, and it's pretty much there at 54. And with this sell-off thus far, it's about 96%, very similar to other altcoins. Remember, in the first bull run to bear market for Ethereum, it had a 95% sell-off. So this isn't out of the ordinary. It's very normal. But this is the game of alts, right? Very, very, very difficult to determine when energy will pivot. This is not following ETH. It's not. Theta is more, I would call it a Venus token, different energy. We're moving into the year of the dragon, Venus, Eosphorus, sun of the morning. Perhaps this light theme could be helpful, especially we're moving into the year of the dragon, which has fire symbolism. And we know Theta token, their logo is a flame. So that could be a thing, that could be something for us to consider. That's where I'm bringing in the esoterica into some of this. So now we have T-Fuel. It's been holding its bottom so far, a little bit stronger than Theta, but still, you see what we're working with here. Now, this is 3 separate trend lines that are coming down as a ray that are all intersecting here at this point. And this is, again, snaking around it after all these rejections. We've come back up and still no recovery energy. But now it's making me think about this other trend line I have. I'll change the color. You can see what I mean. Needless to say, we are interacting with this green trend line quite a bit. It's been since June 2021. So it's a key trend line. Then we had what seemingly was a structure holding at this moment what was an SOS to a backup phase, which led to your buying climax. We returned to this trend line again, then we returned to it again, and then we broke through it, got rejected off of it. Again, a huge sign of weakness. As a governance token, this is kind of what we expect, though. These are like really speculative. You want to have like a 1.5%, maybe 2% max, because these things can have dramatic bull runs. I mean, yeah, with this again, kind of copying 40,000% gain. Pretty wild. Well, now we're back approaching this red trend line level, which I had mapped out for a while because it was this phase back here, a bunch of trading weeks. By the way, we're looking at weekly candles. This was your impulse, and then again, another impulse before a continuation sell-off. Right after the C19 crash, immediately back up to this level of 0.025. So that would be my level. 0.25 is the key level. As deep as this should go. And then we should see some recovery. Now we're going to move on to Litecoin, and we're going to wrap this podcast up. All right. It's been a minute. Well, we had this Litecoin halving, and since a sell-off, and not a good one. because we were holding this trend line over here for 420 days before we just had this big red candle after the Litecoin halving. We're just extending. Okay. And then I have my fib pulled from this current high down to this yearly low, 2022. We automatic rallied technically because we got right above the 382, and the fact that we closed below the 236 on a weekly candle confirms this is the end of the automatic rally. Now, more likely heading to $50 as a psychological level, and then down to 40 based on the way this coin has acted in the past. So now I'm zooming out even more, and you see the story. Look at the last Litecoin halving. Look at what we did. We rose into it, got rejected, and then you have your halving, and then perpetuated a downtrend all the way into the end of that same calendar year. So it's pretty much no different. We rose into the Litecoin halving. Then now we've been selling off after it. Pretty identical. So you want to be cautious. Look out to this level, because at the end of that Litecoin halving, we came all the way down to about $40, which is what I told you before. This is your C19 crash. Look at what we did. We traded around $40. Then we had a little SOS, a backup phase at $40. $40 is the key level for Litecoin, guys. So if you're somebody who's interested in these OG coins, which I don't recommend, I'll be honest, I just don't recommend them. They're old news. They're a distraction. I'm looking at stuff. I'd rather just not get involved personally. Well, $40 would be your level. And I suspect if we're going to go real deep, it'll probably hold 33, 34, 35. And that comes back to this. You have your C19 crash. Before that, you have your selling climax. And this is just a natural kind of uptrend that we've held. And it would be, if you just disregard this yellow line, it's been the supports. So we have low, higher low, technically. It would be weird to see Litecoin go under 39 though. I'm just sharing my own intuition here. Even though I'm not really bullish about this project, nor do I hold any, and I probably never will. Like, why bet on the 4th place coin or the 5th or 6th place when you could just bet on the category winner, especially for this stuff that hasn't proven itself much in the past however many years. We're trading at the same levels we were back in 2017. Just want you to think about that. Back in 2017, let's look at where Ethereum was. It's trading at $200 to $300 in 2017. Bitcoin in 2017 was trading at $4,000. Now it's trading at $25,000. So this coin is still pretty much just been in a huge horizontal trading range now for a very long time. And the fact that we're in crypto, these things should be speeding up, and it's just kind of trapped in this range. So I'm not bullish on it at all. I think it'll probably just follow Bitcoin's energy for the most part leading into the next cycle. But as for any extreme price discovery to the upside, actually, you know what? Maybe I could talk about that in a future video, because Litecoin tied to Jupiterian symbolism could be something there. But anyways, I still think there'll be more opportunity and more gains in the ISO 222 tokens and in ETH and Bitcoin, and I like to keep things simple. And again, I told you earlier, part of my de-risking strategy for purposely taking a loss is to take that fiat and now repurpose it effectively to have less overall holdings. Now, I'm going to be wrapping up this podcast now. We're almost at an hour and 20 minutes. It's been beautiful sharing all these ideas and theories. I just want people to know, please contact our community with any general questions. I've been getting a lot more DMs than usual lately with stuff that I talk about in almost every video. And I appreciate your understanding. If you could just leverage on the community, share your information there. It allows me to have more time to focus on creating and providing you with the best material possible. So again, appreciate your understanding. And very soon in the beginning, probably the first week of October, I will be coming out with that new Great American Eclipse Decoded. Really excited to share that with you guys. So I'll be catching you guys on next week's Red Pill podcast. Much love.